Yo, so I just got this broker sent me this one business is a truck repair company based out of Florida. They're doing about 1 million revenue, give or take. And I was thinking one of the biggest issues that people have when it comes to like analyzing or valuing a business is they assume whatever they're paying for is the only cost. And like in my experience, the deals I've gone through, there's various factors you got to take into account, and I even got it written here. Like for example, you got to take into account the price of acquisition, right?
Yeah.
So usually it's typical in industry standard that you base it off a multiple of earnings. So for
Mhm.
example, HVAC companies, plumbing companies are going for 7x. They're super overvalued in my opinion, because it's going to take you 7 years to break profit. What people don't understand is like, I've had negotiations where the seller tells me, oh, if you only do this and this, you could double it or triple it. And I'm
Yeah.
like, and they try to use that to reason and justify their price. And I'm like, John, if it were that easy, why didn't you do it? You know what I'm saying? Because
True.
growth costs money. On
That is true.
paper, it may seem simple, right? Marketing, sales, whatnot, but it costs money. And we got to account for those factors. A lot of people don't. So we got to account for the price of acquisition. And the business, as it's currently operating, it's capped out. A lot of people don't understand that. With the current people, the current technology, the current systems, your current methods, whatnot, your customers, you can only make X amount. And in this case, they're doing 900,000 in revenue. So if we want to take it from 900 to 1.5 to 2.5 to 5, we got to completely revamp it. You see what I'm saying?
That is true. So, like, this is what I was thinking. If I had to buy a business or acquire a business
Right.
and not start from scratch, right?
Mm-hmm.
It's going to cost me the X amount, like the 2x, 3x. This
Right.
this business deal is 7x, which is an insane valuation,
Yeah.
right? And when
No, I mean this
I
deal this deal isn't 7x. We got to negotiate it. But we were using 7x as an example of what's popular right
yeah,
now in plumbing and HVAC, which is insane. And the only reason people pay for that is it's not people paying for it. It's financial institutions. They got all this capital they could throw it. But I mean, you as an individual, man, if you're buying a business, you'd be insane if you're paying 7x, dude.
yeah, and also after I pay, I still have to pay more for running the business, which
Yep.
is all of these costs that we are talking about. And the X amount of costs on top of another X amount of costs is
Right.
just adding up. Even though I go in debt, you
Right.
know, through these financial, I still have to pay off all of this at the end of the day. And, uh, you know, there is no metrics out there that can help me evaluate all of this.
No, I mean they're
There's
just gonna tell you what is it gonna cost to buy it, but these
yeah.
guys aren't modeling out what's the cost to run it and grow it and maintain it.
So let's talk about how we can actually, you know, model this thing in a way that if 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 there's an M&A or a VC firm or
Right.
anyone who's looking to invest or buy, how are
Mm-hmm.
they going to go through all of this due diligence? And even once they're done with it, what do they do next, right?
Yeah.
It's it's something that not a lot of people in the industry talk about,
Right.
right? Brokers, man, you got to stay far away from them because they're not going to
There's
about
sharks in
all
the
of this.
water, dude. They're looking for easy prey.
Exactly.
You know?
And it just makes it difficult for any business owner out there to accurately evaluate their
Right.
business, get a proper transaction value, like, hey,
Yeah.
this is what I want for the business, and this is what it's going to take, right, to run the business
I
after
mean,
I sell
look,
it.
I'll give you my perspective. So valuations, right? It's the start of everything. How much are you gonna pay for X, and how much am I gonna earn for X, right? And the
So,
problem with valuations is that it's inherently biased. If I'm the seller and I hire a firm to value my company, in this case the broker, we're gonna value it to maximize our exit opportunity. I want to cash out the highest amount I can, right? If I'm a buyer, I'm gonna value it to where I can pay the least and assume the least amount of financial liability on the books. So you have this bias. So this negotiation that takes place is, about compromise. People say a company's only worth what somebody's willing to pay. I completely disagree with that, because if you get somebody that doesn't understand numbers and he overpays for it, is it really worth that much? And that's the problem with America. Everything's overvalued. So if we want to like talk about technicality when it comes to valuing these companies, I think we should first understand where the money's coming from. How's the money being made? That's the number one thing that matters. Because we could talk about growth and forecasts all day, but we got to ensure the money that's already coming in is going to stay there for however long the loan is going to be. In this case, you get an SBA loan, it's going to be 10 years. You got to make sure you're going to have that money for the next 10 years, buddy, or it's going to start coming
Yeah.
out your pocket. And you
Yeah.
don't want to come into it. So, I mean, in finance, we're taught that the past predicts the future. If a company's been growing at an X amount of percentage year over year, it is more likely to continue to do that. Unless there's some external force that comes in and disrupts that. Example, COVID. How many companies could have predicted it? Almost nobody, right? So it disrupted things. So you got to understand, how is my money being made? Well, if you look at mom and pop and small companies, usually you tend to have a higher customer concentration. It's usually the same people coming back. And the only reason they're coming back is because of the reputation you built, right? So one of the things we do when we buy a company is we want to aggressively cut costs so we could try to make profit. And the problem with aggressive cost cutting is that you're going to eat into something. Everything has a price. In this case, you're going to fire people. You're going to lower, equipment. You're going to stop paying for certain things. You're not going to keep your fleets as updated or your tools and equipment as updated regularly because it costs money. So what is that
Yeah.
going to happen? Is going to translate into a decline in quality, which the customer is going to be affected. And then you got the employees that don't have the tools to keep operations going. That's going to start taking a hit, right? So there's a lot of things you can't model in an Excel spreadsheet. Like, it's
Yeah.
beyond the numbers. And I
Right.
mean, a lot of these analysts that are coming out of school, they might come from a good college, but what experience do they have running a business? It's easy to put
True.
$50,000 on a P&L, but go make
Yeah.
50,000, right? A totally different story, man. So when I was running the diesel shop, I came to realize, wow, things are expensive, and we got to sacrifice. We got to, what they say, rob Peter to pay Paul. That's just how it
Yeah.
works. So
Hmm.
how can we do things more efficiently? Let's figure out where the money's at. Let's figure out where the money's at. I mean, is it contracts? Right? They say the value of a business is its price divided by its cash flows divided by risk. So is it
Yeah.
contracts? How much of these contracts make up the revenue? Are they going to potentially expire? Can we renew them? If we can, we got to discount it, right? What
Yeah.
about customers? Are we in a location that is a customer hub? What does that mean? If you go to the ports, if you go to the West Coast and East Coast, you got all the trucks because it's the ports. If you go to Utah, Colorado, Idaho, it's not trucking states. You only get the
Yeah.
trucks that are passing by. So
Hmm.
how much can you keep predicting or forecasting how many trucks are going to break down and they're going to hire you? It's pretty
Yeah.
difficult, right? So first of all is model cash flows. How much money do we have? That's why I don't like using EBITDA. An investor might look in EBITDA and be like, well, it gives you a picture of what the business is generating without taking into account certain items. Great.
Hmm.
EBITDA is a proxy to cash flow, not cash flow. That's
Yeah.
the thing.
That, that is true.
So let's focus on cash flow. What is the cash flow? Is it net income, right? So it's very difficult. These are a lot of variables that I don't think humans know how to do well. And that's where we come into the topic of leveraging AI, leveraging technology. I mean, I
Yeah.
could give a company to 50 different accounting firms and they'll all give me a different price. How does
That is
that
true.
work? You know what I'm saying? Like, that's fucking
Yeah.
ridiculous. But if you go
Yeah.
to a house, homes based on zip codes, they got a certain price range. So you only got a $50,000, $100,000 wiggle room to negotiate. When it comes to businesses, we got millions of dollars of wiggle room to negotiate. So it
Yeah.
doesn't make sense. And I mean, that's something we're building, right? AI powered financial analysis platform. Because you got to
That is
eliminate the
true.
bias. You got to eliminate the bias.
Yeah. I think when we, you explained it really well. If we are able to keep an account of all of these variables, right? And tell the AI that, hey, this is the industry, these are the variables, these are the contracts, this is the financial documents,
Right.
the AI will be able to, you know, make a better analysis, keeping everything, considering everything, and even more, you know,
Absolutely.
the more data that comes in. But for a human mind or for a firm, it's impossible, no matter how many analysts you have on board, no matter how many years of experience you have, right?
Yeah.
It, it's the competition is with
There's gonna
AI.
be bias. It's as simple as that. I'm a guy from the trucking industry. I'm gonna overestimate my ability to grow this company.
Yeah, I mean, at the end of the day, we have to do that, right? It doesn't matter if we leverage a human mind or AI.
Yeah.
You know?
I mean,
And
let's talk about some ways people get it wrong. First of all, one of the things I personally hate is what we call a straight line forecast. So, a business making $1 million revenue in a year, and we assume, okay, 1 million divided by 12. No, there's something called seasonality, right? So,
yeah,
for example, I was operating a dump truck company, and once winter comes here in Utah, you're not moving dirt. I'm telling you, you're not moving it. If it's
yeah,
raining, you're not moving dirt. Why? Because if the rain falls on the gravel, on the dirt, it's going to soak up. There's going to be an added weight because of the water. The water weight is real. So
yeah,
a guy think he's buying 20 tons of dirt, he's only getting 17, right? Say he needs 1,000 tons, add it up.
yeah.
Then again, it's very dangerous for you to operate in these mudslides and this dirt at these freaking mountains with these huge vehicles. So you realistically got 3 to 6 months, depending how bad the climate is, of zero operations. Literally zero operations. So, but
yeah,
you still got to pay for insurance. I
yeah,
called Progressive and I was like, hey, can we negotiate something to where the months my vehicle is not operating, we pay a minimum amount, just the legal minimum?
yeah,
And in the state of Utah, some states have seasonality insurance, where the insurance takes into account the seasons and they understand you're not making money, so the vehicles aren't moving. There's no risk, right? Utah's no, it's flat, bro. So we gotta pay X amount regardless if we're making money or not. Those are factors we gotta take into account. A lot of people come from spreadsheets,
yeah,
you know, and that's not gonna tell you what a business is. You gotta be in the business. A lot of guys are coming straight out of school and they're like, "Hey, I want to buy a business instead of create one." There's a
yeah.
less risk because it's already established, reputable. Great,
True.
but you could double or triple your risk by assuming all that debt. Do you want
Yeah,
to face bankruptcy? Like, you don't. You don't want to come in
yeah.
and break your record in
There's
3 years.
there's another funny term most college graduates are doing is
Mm-hmm.
they're going to mom and pop shops. You know, they're these
Yeah.
old, people are retiring. They want to like take over their thing. You know, put in technology and make it all good. No, they
Right.
don't even know what it took them to be there, and there's a reason why they're still there,
Yeah.
and they don't want to quit that. If they've ever talked to a guy who's 60 plus
Mm-hmm.
owning a business since 20 years, that person knows in and out of everything that has to do with that business.
Exactly.
And these young graduates think that they might just take over and expand it, like
Right.
it scale it, right? Scaling is the new game, but
Right.
it's they don't have even the analytical tools to start with.
Yeah. I
So
mean, I mean, let's start with what they say: a business plan never fails on paper, right? Once you actually put it
that's
into
true.
practice, you got a totally different. I mean, we've jumped around various ideas, because on paper it looks great, but once we start putting the pieces together, we see that there's additional roadblocks. There's two
Yep.
aspects to a business, and people don't understand this. There's managing it and there's growing it. You cannot do both.
Correct.
You can do both. And a lot of people are like, "Whoa, why
That
are these owners stuck or capped at $1 million?" Right? Well, let's look at it from
mhm.
their perspective. They're probably pocketing 2 to 300 grand a year. They're comfortable. They got a life to sustain, a family to take care of. They're very risk adverse. But then again, how much can I grow the business if I'm under the truck or if I'm on the roof with the roofers, right? So a lot of these
Yeah.
guys, they're owner operators, meaning they're not just owning the thing, they're operating it as they go. And they
Yeah.
don't have time. I've been involved in a lot of small boutique firms that are making a few $1 million and the owners working 16, 18-hour days. Like you're coming to them and pitching them sales tools and technology, bro. He's trying to figure out how to get this truck out in the road. You see what I'm saying? Like there's a huge disconnect. So
Yeah.
people got to think, okay, they're thinking they're gonna walk in, assume the owner's salary, make 200-300 grand, and chill. That's not how it works, buddy.
Yeah.
You're gonna have to probably get an operator to run this thing, and you're gonna have to split your salary or pay him market rate and figure out what to do with you. Right? So
Yeah.
if you're gonna talk about growth, which is the next step, is gonna cost you money. I mean, I grew the shop 500K top line revenue off the phone, but it took me a good year and a half. And that was a full time job in and of itself. That means I couldn't
Yeah.
even worry about the financials. I couldn't worry about customer service. I was on the phone or shaking hands on the field. So you got to
Yeah.
realize if you're going to buy a business, what's going to be your role? Do you want to run it and operate it, or do you want to grow it? You can't do both.
Oh yeah, that's I mean that's a good point you put there, because since I work with a lot of doctors and I help younger doctors, acquire businesses from retiring doctors, right?
Yeah.
And they think that it's a good deal because from day one they can start practicing, but they don't understand what their role is,
Mm-hmm.
because the retiring doctor was not only practicing but running the business too. He was taking
Exactly.
care of the, billing, the staff, and all that kind of stuff.
Mm-hmm.
So younger doctors are not trained to do that, and what happens is they struggle operating the business, right? Because they're only trained to see doctors, they're only trained to see patients, right? And it's, like you said, it's hard for them to actually identify what role are they supposed to play once they acquire a business. And it not only goes to, the small service based industry, or doctors and medical practices, but every other
Everything.
industry out there. Everything has a hierarchy, and everything has, a key player in it that, runs it or operates it. It's what we are trying to do is we're trying to make it easier for, the business owner, right, to understand how to operate, who to, hire, or
Yeah.
what are they buying into. And I think this new AI is going to be a game changer, where if we put in all of these details, just on a software, and give us a visual representation of what's going on in the business, it just makes it easier.
We want to create, beyond numbers, an operating system for business owners. How can they manage their business, right? And feel at ease. I think the reason people burn out is because they don't know how to control everything. And the point
Correct.
is actually not trying to control everything. We want you to detach. We want you
Yeah.
to replace yourself with systems, with processes, with tools, with
Yes.
technology, with people. Because at the end of the day, our goal, like the goal of the podcast, is to teach owners how to go from working in the business to working
Mhm.
on the business.
Correct.
I knew a guy working 18 hours a day, and he's making 2-3 million a year. How do you even
Tell me
enjoy your
about it.
money? How do you enjoy your money? You got no
Yeah.
time to enjoy it. And I mean, a lot of these guys are just gonna die on their desk. And then a lot of the new cats that are coming in, they're just gonna burn out. So it's like,
That,
where's the transition coming in? The transition is not just you teaching me how to operate it, it's setting me up for success. So
yeah.
as you come to your exit, and a lot of reason why these companies don't sell is because the new buyers, it's literally they're seeing a headache that they got to maintain. So I got to come in and
Yeah.
do all this. I might
Yeah.
as well just go work at JP Morgan, make six figures. You
Yeah,
know what I'm
man.
saying? Like, what's the
Yeah.
point, right? So the thing is implementing the tools, processes, procedures, and systems that allow for you to transition. Because when you could detach as the owner and only work 20 hours a week and make that same level of income or more, well, that's a huge value proposition for the new guy coming in. Hey, you only got to
Yeah.
check in. That's really
Yeah.
good. That
That's
allows you to add on to it because I'm not just too focused on keeping this alive, right?
true.
But let's touch on the other subject, the opposite, right? So if people are like, well, if we're gonna buy a small business and they're lacking all these systems, why don't I buy a bigger one, right? That already has the systems and people and processes in place. And I'm like, yeah, great. Besides, who's going to fund you when you don't got experience? The
Correct.
most
That is,
important aspect of any company is its culture. And
yeah.
people got to be able to respect its leader, right? So you're
Hmm.
what, 22, 23-year-old coming out of college, barely knows the industry's terms. And you got guys that have been working for this company for 40 years, twice
Yeah.
as old as you. How do you keep them on your team? They
Correct.
could
That
leave.
is. That
these
is
people are
something.
your employees. You don't
Yeah,
own them. They
that is
can
true.
leave. And that's a
Yeah,
big problem a lot of people face. They come into a company, they're not able to gain the respect because they got no reputation, they got no track record, they're not adding value. I mean, people are gonna leave. They're like, yo, this guy doesn't know what he's doing. I'm out of here. And that happens a
yeah,
lot. Culture clashes will break deals. So,
yeah,
if you're a young guy coming in, we want to prepare you to your first speech. You got these guys like, wow, we're gonna grow this thing, like, because otherwise, what are you doing? If you're walking in and you're asking, hey, what's that? What's this? Bro, your
yeah.
mind's in
That's,
the wrong place.
a funny story. I've actually worked with people like that who, the management gets changed, right? And you get a new boss. The boss is asking you questions about the business. It's funny. It is so funny. You have to sit in meetings and look
Right.
at this guy and explain him what the meeting is about when he was supposed to lead. Oh my gosh.
Yeah,
It, it's
and that's my
it,
boss, man. I might as well be the boss, Like they hire anybody for this job, and that's the
yeah,
thing, bro. Like culture is important, and the recent, these businesses have stayed, right, even though they're only $1 million or whatnot. It's because they've built the track record over 30 years. The people know them,
correct.
the people respect them, the customers
Yeah.
like them.
Hmm.
At the end of the day, people do business with people they like and people they trust. And if they don't like
Correct.
you and they don't trust you, you're out of there, buddy.
Yeah.
So, but hey, on the other hand, how do franchises even operate? The owner isn't there. The owner of McDonald's is not in every McDonald's location, right? Because they
That's
got the
true.
systems and the processes and the
Yep.
procedures.
Yep.
And,
That
and
is so
that's what we want to do. We want to allow you to become a McDonald's. You got to think of yourself as a franchise. If I want to
true.
do a turnkey operation, if I want to be able to turn the key and walk away from this thing, it has to be able to operate without you. If
Correct.
you
That.
are the thing that keeps the business going, you are the business. So
Yeah.
essentially, I'm not buying the business, I'm buying you. Work for me for the next 10 years. You know what I'm
Yeah.
saying?
I mean, this is what actually the last acquisition basically I had in the healthcare space was something like that. And the younger doctor was like, "Hey, the only reason you have this patient book is because you are a good dentist.
Yep.
Like that's the reason why. What if they realize that you're not working on the teeth no more, and it's a new doctor? Are they gonna trust me? And that was a genuine question from this younger
Yeah.
doctor because he was investing probably his life savings, this new dental practice. And the doctor told him one thing, that I cannot give you my skills. I can give you my business. I can give you my patience. I can give you everything that I created, but I cannot give you my skills.
Yeah.
And that just blew my mind because I was just looking at these two professionals talk, and I was like, none of them know what it takes, right, to actually build that trust, right?
Mhm.
The retiring doctor is not telling the younger doctor how to build trust, no. But the key element was the skill. If you're the business, it's hard to exit the business. Let me put it that way.
Exactly. I mean, and how do you model that on Excel? You tell me, right? How do you model out that in Excel? It's impossible.
Yeah,
But then again, this is what we're building. We're taking all of this data. The problem with data is that if you don't have the right person to interpret it, it's useless, right? It's just a bunch of gibberish.
that's
and
true.
and again, we have the bias of, I might look at something one way, you might look at it another way. Let's eliminate that. Let's keep it
Yeah.
extremely purely logical and number based, and be like,
Hmm.
hey, what about this? Let's account for these external factors. And that's what we want to
Yeah.
do. I mean, the whole purpose is implementing the processes, tools, procedures. If you're a small business owner, and I mean, you can't go to sleep at night without your phone ringing, you got a problem. Like,
Yeah.
I mean, that's what we do. We specialize in implementing the SOPs. Uh, but with that said, we're building a platform for the future of finance. Because a lot of people look at it from an investor perspective, right? They think buying a business is passive income. No, it's not. It's active income. You got to work
Yeah.
them. You got to work it for that money.
That's
This
true.
this is not a passive investment. Unless you're going to be a silent partner and buy 20% and wait on it, this is not passive. So a lot of people that think, hey, you're buying a company and it's passive income, get out of here, man. You're lying to yourself. So circling back, what do you got to account for? I mean, first of all, you got to account for the price of the business. How much are you going to pay
True.
for it? Then you got to account for the cost of working capital. What does it cost to keep the wheels turning? The operations, right? The people, their salary, the payroll. Then you got to account for capital expenditures, new equipment. If we got fleets, we got to renew our fleets. The older trucks, if things break down, we got maintenance. That costs money. And then the cost of growth. How much is it going to cost us for us to grow? And this is why, personally, I dislike real estate based companies because it's very expensive to grow. Okay, I was looking at a senior care facility based out of Los Angeles, and the facility was like a historical thing. So they were asking like $25 million for the facility, and it was only making a million. Like,
Yeah, I mean, it's
it's
the cost of the land.
ridiculous. So I'm like, okay, let's model it out. How do I take it from one to two? There's only one way: more rooms. So do I
Yeah,
have the land? Do we have land, or are we in a corner and there's nothing else I can buy? Because if we're in a
hmm,
corner and there's nothing else I can buy, I'm buying a debt bomb. Why do I even want this thing?
yeah,
There's no money for me. Do I increase services? I mean, how much can I increase it before people start leaving and people
yeah,
stop buying?
yeah.
Right?
There's a demand to serve. Correct.
So you got to account for that. So if we wanted to expand and say we have the option for land, we own the land, great. Now we got to build. But if we don't own the land, we got to buy it and then we got to build. That's why, personally, if you want to buy a company and it's your first business, buy a service based company because your overhead is extremely low. I mean, the shop I was working at, they were making 1.5, and all they had was two mechanics in a little 2,000 square foot facility, and they were knocking it out, man. Because it's just service, You bring your truck, we already got the tools, the expertise is gonna fix it, and out of here. So that's another factor. A lot of
Yeah.
people don't know how to value a management team. What is your management worth? You
Yep.
know, what are your
Hmm.
employees worth? You got to take that into account. The thing with private equity, the reason they don't care to overpay is because they're going to chop heads. Let's be
Yeah.
totally honest. They're going to come in, they're going to replace management. So they're going to recoup all of that income in management, put their guys that have experience in all these industries, and they're going to grow it and scale it and do a trillion other things. But they got capital to work with. If you're limited on funds, what you want to
Yeah.
do is pay the least, keep the most cash flow, and operate extremely smart. Because I'll tell you,
Yeah.
the numbers are different when you sign for that check. When you sign for that loan, okay, and it's in your name, 50,000 doesn't feel like 50,000. It feels like 5 million. But
That is.
I think this was a great episode, and just wrap it up. And these are things that we're gonna be able to demo for you guys in the future as we're developing this platform. But this is
Yeah.
what you want to take into account when you're buying something, you're not just buying the car. You got to pay for the fuel, the insurance, and the maintenance. Same thing happens with a company. So take it into account. Any closing remarks, Emmanuel?
No, I think you covered it all. And basically, our goal over here is to help young entrepreneurs and you know uh, business owners, mergers, acquisitions, anyone and everyone who has to do anything with financials, give them a better understanding of what to keep an account in an organization before buying or while selling or even just operating it. So this is what we're going to be doing.
Absolutely. Hey, we'll see you guys on the next one.